This video is looking at examples for Chapter 3 in Government Nonprofit Accounting. So in Chapter 3, we talked about creating the budget and creating budgeting accounts. So you see that this information here is provided by the Town of York. This is our general operating fund and budgetary accounts. We have no restricted, committed, or assigned fund balances. We have our estimated revenues, actual revenues, appropriations, and expenditures. And then our unassigned balance at the beginning of the year. So the first thing that we're going to do is prepare the journal entry to record our budget. So what we have is, if we have, let's put debits and credits, then we're going to record our budget. We have estimated revenues of $32,150,000. And then we have our appropriations of $32,175,000. So if you'll see, I left a spot here. So of course, debits have to equal credits. And we see that our appropriations are higher than our estimated revenues. And so we need to account for that. So we have this budgetary fund balance account to account for the fact that our budget currently overspends our estimated revenues by $25,000. So 2, we have, did the Town of York engage in imprudent budgetary practice by authorizing a greater amount of expenditures than revenues estimated for the year, or potentially violate town or state balanced budget laws? Let me see a typo there. So balanced budget laws. So we have no to both parts of those questions. Any fund balances other than non-spendable and those subject to minimum fund balance requirements by ordinance or policy can be considered for appropriation in the same manner as revenues and other financing. So we see that we had a $500,000 unassigned fund balance at the beginning of the year, so we can use that $500,000 for anything we would like because it's unassigned. So we're able to use that to balance the budget and the fact that we had appropriations greater than $25,000 in our expected revenues or estimated revenues. So then you can see in 3, it says calculate the end of year balance for the fund balance unassigned that would be reported on the town's balance sheet that would get prepared on September 30th. So what we have is we have our fund balance, unassigned, beginning balance of $500,000, and this is not subject to the debits or credits. Okay, this is just kind of a statement reporting. We have revenues of the year. So if we were going to close our revenue accounts of the year, we had actual revenues, and I'm just going to copy that down, of $32,190,000, and our expenditures of the year, where we had actual expenditures of $32,185, or $32,185,000, and put a negative in front of that so it comes negative. So then we have our fund balance unassigned end of year. Should be $505,000. Okay. In this second example, we're going to be utilizing both the general ledger and the subsidiary ledger, and we're going to look at the impacts of both of them. So we have the City of Snowville, we have an approved operating budget for the fiscal year beginning on September 1. And the first statement we have here is to prepare the journal entry, including subsidiary ledger entries to record the budget. So that's the first activity that we're going to perform, is that journal entry. So let's look at that over here. I'm going to make this a little bit bigger so we can write town names. And then we're going to have the general ledger, the subsidiary ledger, and then we're going to have our debit and credit, debit and credit. Okay, so now we have our accounts, and I'm just going to do some formatting here. Center. Okay, so the first thing that we have is, just like our first example, we have our estimated revenues. And we can see that our total estimated revenues are $9,070,000, or $2,970,000. I don't know why I'm having problems with numbers today, but I am. Then we're looking at that budgetary fund balance. This is going to be credited because our appropriations are less than, so we need debits to equal credits. So we have these two amounts. So our appropriations is credited for $2,915,000, and then the budgetary fund balance is the difference between the two, because debits have to equal credits. So we have $55,000. Now we're going to record in the subsidiary ledger. So first we have our estimated revenues ledger. So we have our taxes, licenses, and permits, fines and forfeits, intergovernmental. Okay, and we're just going to copy these amounts from over here. And then we have our appropriations ledger. And we have these. I'm again just going to copy these over, copy them down. We don't need the total. These are credited, so I'm going to put them in, and then we have the amounts. Okay, so now we have recorded we've completed number one, prepare the journal entry, including our subsidiary ledgers. We have recorded the budget. So that is what our journal entry looks like. Okay, then in number 2, we're going to prepare journal entries to record the following transactions that occurred during the month of September. So we're going to look at these different transactions, and we're going to record both in the general ledger and the subsidiary ledger. So the first thing we have is that we have received cash and revenues. So we received $43,000 in cash, $43,000 in revenues. That's our general ledger recording. Then we have our revenues ledger, in which we're going to record that those were licenses and permits and fines and forfeitures in the subsidiary ledger. So we had $34,100 and $13,200, and actually so that's the first to record the revenues. So now we're going to record that we purchased supplies. So let's look at what our total is for these supply orders. Okay, and then we're going to have our encumbrances. Of $32,890, and then we have encumbrances outstanding of $32,890. We are going to then record in our encumbrances ledger the actual encumbrances for each of those items. So I'm going to copy that list over. And we have the amounts that we ordered here. Okay, in our subsidiary ledger. For number 3, we have supplies were received at the actual costs shown below and paid in cash. So there we're going to record in the general ledger first. So we have our totals. Let's total these columns here. So you can see that we encumbered $32,890 and we had an actual spend of $31,990. So we're going to first record in our general ledger, and we're going to undo the first journal entry that we did for the encumbrances and the encumbrances outstanding. And then we're going to record that we actually had expenditures and paid out cash in the amounts of the total. So that total being $31,990. Easier to copy it over than to retype it again. And then we're going to record, and we're going to remove the encumbrances, or we have the encumbrances that we recorded. So we're going to now credit those accounts on our encumbrances ledger. So we're going to copy these down. Oh, yeah, that's because I copied those, huh? And we're going to credit those amounts to remove them from encumbrances and record our actual expenditures in our expenditures ledger. Okay, so we're going to, and probably copying and pasting those would have just been easier. So now we have the actual costs that get recorded to those accounts for the actual expenditures or expenses. Yes, you can see that double, this is that modified accrual accounting. This is one of the things that students struggle with the most, is this double recording and then the undoing and reposting of these different transactions. It's a difficult thing to get used to. Okay. Now we have calculate and show in good form the amount of budgeted but unrealized revenues in total and from each source as of September 30th. So we don't actually have, I'm just going to give you those numbers. Okay. Oh, no, we do have those numbers. So what this looks like then is we put the revenue source. Okay, so we've operated for a month. We have our budgeted revenues, the actual revenues that we've received, and then our unrealized revenue. So revenue we have not yet received. So we have these revenue sources of property taxes, licenses and forfeits, grants. We have our budgeted amounts here. Carry down. Let's do a total column. And we have the actual amounts received. So the only things that we've received so far is that $34,100 for licenses and permits, and the $13,200 for fines and forfeits. We have not received any of our other amounts. So I'm just going to formatting here. And then our unrealized revenue, which is the difference between them, of course. So our budgeted minus the actual. Copy that down. Okay, and so now we have our budgeted to actual revenues as of September 30th, which is the end of the month. Then the last thing it says calculate and show in good form the amount of the available appropriation in total for each function as of September 30th. So this is a very similar thing where we have the appropriations, existing encumbrances, and then our expenditures. So we have appropriations. So we have our functions, put our total here, and then we have what we appropriated. We don't currently have any outstanding encumbrances. So if we were to have outstanding encumbrances, this would mean that like we ordered supplies that didn't arrive. And we don't have that situation because we were talking about the supplies order. So if it said like public safety only received 10,000 of their supplies, then we would still have 1,780 as the encumbrance. We would still have an amount encumbered that was going to, so we don't have any of that amount. So we have our actual expenditures that were recorded. We don't have anything outstanding that has not been arrived yet. So our available appropriations is appropriations minus what has currently been spent, and that is what is available at the end of the month for those entities to still spend. Okay, the next example, the statement activities, will be in a different video, trying to keep these much shorter than 22 minutes is my goal. But I wanted to finish this problem since I had already started it.